Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Let's take a look again at euro currency. So you can see euro yesterday has shown significant upward action, very good thrusting motion. So, and here we could say that euro currency is creeping with the overbought area right now. So because take a look, once it has reached the overbought, shows minor retracement and return it back up again inside of the session on intraday charts. Minor retracement again, meet the overbought. Now again minor retracement. So currently, guys, we probably should focus on the final destination point of this action, and it will stay. It will be somewhere around this confluence resistance. So this is our major resistance cluster. So you can see this combination of three different level stands. It's kind of the confluence level. So it's first border of this consolidation 1730, higher upper consolidation approximately 1820. So it's rather wide. It's approximately 100 pips. So, but that is the area where we expect to get deep retracement down, because our medium-term scenario suggests these hand shorts. So those of you who are watching our weekly reports, you probably know this pattern, because we have talked about these hand shorts for a considerable period of time already. And currently, guys, we are coming to the final stage of this pattern, because market mostly has formed the head already. So because it almost has returned back to neckline. So just few pips stand here till the neckline area where it should appear. Speaking on the head, shape of the head, it's very nice, because take a look, it's kind of the very fast and sharp V-shape reversal. Here we see very good signs of thrusting action, which is very good for the hand shoulders, because that's the area where bulls should take control over the market. And we definitely see how market fast turns situation in opposite direction. Here we just saw the plunge down, but right immediately we see the fast upward action. That's very good. So that makes us think that, well, theoretically it is possible still taking the long position somewhere on this action with a minor retracement with the hope to reach some of the targets. But as we stand closer to the destination point, the attractiveness of this position is reducing gradually, because risk reward becomes not as attractive, and when you're expecting the major retracement here, and you see that they probably will get the better opportunity for taking the long position at the better levels. Here it's not very interesting to trying to catch some few pips with the taking position somewhere in this area. Well, for scalp traders maybe it makes sense, but for those of you who trade on daily, as we said, usually there are 2 points to take the position on the hand shoulders. The most risky at the bottom of the head, because you are anticipating the overall price action, and you take the most risk because you do not know whether the market will start to form hand shoulders or not. And the most safer area to take the long position is on the bottom of the right shoulder, when mostly all the pattern stands in place. On the right shoulder also you could place relatively tight stop, because failure of the market right at the bottom of the right shoulder will very fast tell you that something goes wrong, because market should either hold here and restart upward action, or any hint on a possible collapse in action back to the bottom of the head will mean the hand shoulders is failing, and that will be very early signal. So that's why you do not need to place too far stop here. So, and on the daily chart, particularly this moment we are waiting for. So for daily traders who haven't taken the position here, now will probably should get chance to take the position here. So on the intraday chart, guys, we will try to estimate the possible levels that could be reached by the market and where the neckline will be. So we'll take a look at the 4-hour time frame chart. Here's a very interesting picture. Right now we need to shift some greater ABCD pattern. Here we could get only one example of it. It's meaningful BC action only here. That's why we're using ABC bottom. Market is coming to the COP. This is the first point where market really could turn down, because this is 1730 area, weekly pivot resistance 1, and 1730 actually agrees with the first fib level. So maybe market could turn down somewhere in this area. It's also possible. At the same time, we can't ignore this fast acceleration. That's why also some chance exists that market will turn from the upper border of the daily consolidation, and here it could be OP target. This OP of this ABC stands a bit higher, is 1850 approximately, and mostly it also agrees with the upper border, is 1820. 1850 is very close, so it could be some equal to this top, so it's approximately 1850. So market could show really harmonic action here, reach approximately this area, reaching the OP, and then starts downward action. So these two targets probably will be the points where market really could turn down. That's what we should keep an eye on. So nearest target is 1730. Also, in final moment here, guys, take a look how market keeps harmonic action. This is a very good sign for the thrusting market. It means that trend is stable, it's reliable, and it's consistent. And as you can see that market forms very clear and this and similar harmonic pattern. So harmonic swings, here is double harmonic swing has happened because this was strong resistance. If you remember, we were trying to trade it. So that's why if you are somehow suggesting taking the long position and while market hasn't quite reached yet this COP target, you could watch for harmonic retracement because market keeps us very nice. But when the market will hit the major target, the harmonic retracement probably will be small, and you should rely on the larger, more harmonic numbers in the retracement. But to be honest, guys, when the market will hit the COP target, I would suggest that it's better to not take any longs because this could become the point where market will start deep retracement. So it's better trying to take the long position until we are on the road to the COP target. That's of course only for scalp traders, it's not for daily traders. So while we're on the road to the major targets, you could try to use the harmonic swings for taking the position. But as soon as we will reach it, it could be a bit dangerous trying to take the long position because we are actually waiting for deep retracement. So it means that here it's possible to use a harmonic swing, waiting for a COP, then take the pause, and not take any longs position. See what reaction will follow if market somehow will break COP higher and continue to move higher. There again, you could try to use the harmonic swing with the expectation of the OP reaching. So that's approximately how the strategy of the trading on the intraday chart could work with the harmonic swings. But again, as I said, our major context is up, and we're, as a daily traders, we're waiting for good point for taking long position. We expect that as soon as market will hit the neckline, we should get a reasonable retracement down that led us to take the long position for further upward extension to the upside.